Hey everyone, want to give you the heads up that the Chart Guys has a new service coming out. The Chart Guys have always had goal number one of teaching people technical analysis, but we realized through feedback that takes a whole bunch of time and some people just don't have that time with their lifestyle. So we're going to be releasing a swing report that goes out on a weekly basis, and it'll be both in written and video format. And we are currently rolling that out with our members at the moment. So keep an eye out for our social media, and certainly in front of these videos I'll let you know when that swing report goes live. Essentially, the goal of the swing report is to save you time, put in a couple dozen hours every week, get this report out, and ideally help you profit. So I appreciate your support, and I will let you know when it is live for the public. Hey traders, checking in on the market. So a little bit of a bounce day today with some bull momentum into the close. We have the financial sector stress test results after hours. The Federal Reserve says it will limit dividends and buybacks from the financial sector. And the financial sector is taking a little bit of a hit after hours. It had a big bounce day today, which helped our laggard sectors bounce a bit. And by laggard sectors, I mean airliners and cruise liners. But you look at XLF, big green day today. What's after hours doing? It's pulling back, absolutely. It's a bearish reaction. But bigger picture, SPY right now is only down 20-some cents. Tech sector just fine. And financial sector is down. But it's important to watch what SPY holdings are. Because if you've been watching this breakdown, it has been constantly shifting away from financials. Financials used to be number 2. When I started tracking this, financial sector was the number 2 holdings in the S&P 500. Now healthcare is higher. Tech sector is even bigger first place. Consumer cyclicals have passed the financial sector. So the managers of SPY know what they are doing by trimming the weaker sectors. We've been talking about the financial sector being weaker than tech and even healthcare for a long time. And we are not the smartest guys in the room because there's a lot of people that clearly recognize that. And we are seeing adjustments being made so the financial sector is not going to pull down the entire broader market. So just be aware, this is something you want to check in on because it does change and you want to be aware of this. Maybe check on it once a month, see what is most important. And I used to have the financial sector as number 2. And now healthcare is number 2 as far as what I value as the most important. And of course, tech's not even close to anybody. Tech is easily the most important sector in the broader market. And again, we looked at those names from yesterday, our strongest tech names. You can see QQQ right now, still extremely strong. Trying to set a daily higher low. Have we changed the hourly trend on QQQ? Yes. Into the end of the day, you can call that an hourly higher low and higher high. So the bulls are hoping that's our daily higher low being set. It would keep the sector extremely strong if it were. Amazon, extremely strong. Apple, extremely strong. You know what I'm going to do here. Microsoft, bull flags are everywhere. Bull flags are all over the place on this tech sector, and it's up to the bears to prove to us that these are not bull flags. But as of right now, the tech sector is extremely strong still. And the S&P 500 bears are not going to get followed through unless these names lose their daily uptrends. I don't know what I just said, but I meant to say the S&P 500 bears are not going to get any follow through unless these names lose their daily uptrends. So we're going to be watching the 2-day time frames. Again, for clarity, I like it the best. Seeing messages from some people that they are struggling to trade in this tightening range. That is understandable. The easiest trading is bull breaks and bear breaks where you enter new ranges. Whether it's the dump down or the initial bounce, this was choppy. So there's 2 periods of very clear bull action, and the chop is where a lot of people get chopped up. That is where we pump the brakes and trade less, when there is less clarity. When it's full steam ahead in one direction, that's when we trade aggressively and pump the gas. So with where we stand right now, the bulls are hoping that we're going to find a higher low here. I'm seeing SPY is pretty much where we close. So again, the financial sector is down, but S&P 500 right now doesn't care. So SPY is trying to set a higher low. This is the 2-day time frame where every single candle represents 2 trading days of action. And we need to find a higher low compared to 296.74, keeping in mind that the dividend is impacting that. So that's not the exact level, but we're forming a higher low right now. So on the hourly time frame, SPY, bull move into the end of the day. And if we get some follow through, let's look at the S&P 500 futures chart. I like the longer term time frames. Let's look at the 6-hour chart. And we're looking at high, low, double top, broke support without significant bear follow through. We are looking for a lower high to be the result of this bounce, but what the bulls are hoping for is to create enough space to try and change the trend back to the bulls. So again, we can broadly say something that we have not seen on this pullback, which has been a notable pullback, absolutely. We have not seen our lead tech sector bulls show any weakness. And we are not going to break this level of 29.36 unless they do. It's a very simple if-then statement. If our lead tech sector bulls, Microsoft, Apple, Amazon, etc., if they do not show weakness, then we will not see this support level break. IWM, 2-day time frame, high, low, lower high, trying for the higher low. Bulls would love a green day tomorrow, which would give us a more convincing higher low in this tightening range. Regardless, it's looking like we're going to need to wait until next week for a break of these ranges. QQQ. And just one note, I have had a frustrating June. Fortunately, the frustration is sideways rather than dropping. My account has hit all-time highs twice in June, just barely, and then I have no momentum and no flow. When I'm in the zone and I'm trading on my A game, I'm having green day after green day, and it's just my account is going straight up. And this month, I am breaking that all-time high and then dropping back down with a couple-day loser, and then getting back up to it. I'm just chopping. And when looking at this daily chart, it makes a lot of sense to me. So I have slowed down my trading. I haven't looked at the dollar volume, but I would assume it's definitely less than what May was. And I'm patiently waiting for a break of these tightening daily ranges for clarity. And I'm looking forward to the end of June because June has been just a sideways, frustrating month for me. So I am patiently waiting for breaks in these ranges to pump that gas again. Because right now I'm spinning tires a little bit. QQQ, looking for a daily higher low to form. Anything above 231.47 would do it. We're holding 12-period exponential support. Could this be a bull flag compared to that 231 level? Yes. So let's see if the bulls can show up tomorrow, break the high of today, get follow through, which would be very notable if they were able to do so. XLV, 2-day time frame. High, low, lower high, trying for this higher low. Again, on the 2-day time frames on all of these names, if we see a green day tomorrow, it's going to be much more convincing that that higher low is being set. Financial sector, and shout out to, I'm going to have to find out who did it to give the proper shout out. So shout out to member Karkuki, who corrected me. And I'm surprised none of the viewers on YouTube did, but I was talking about how XLF broke to the lower low. It broke to the lower low because of the dividend. That low was 23.09. We dropped down to 22.86. And if you're looking at the dividend distribution, 22.81 with the adjusted level would have been that low. So technically speaking, if we adjust for the dividend, we didn't break that support level. So that means none of our sectors have broken that low, and we're in tightening ranges. Obviously, the financial sector is the weakest that we are watching, but technically speaking, it did not break that support level. And that's an important distinction to make, and I was incorrect when I said that in yesterday's video. So tightening range, green day needed tomorrow. Seeing a little bit of bounce here after hours. Not very liquid. So it's going to be up to pre-market to see where we stand with the financial sector. Biotech sector, is this a daily bull flag? Absolutely. It's possible. The burden of proof is on the bears to break 109.85 for this not to be a bull flag. Why is the biotech sector doing so well? CRISPR names, and I don't know a ton about the technology behind these names. It's worth Googling if that's a new phrase to you. CSPR, I don't even know what the acronyms are. But they are gene-altering stocks, CRISPR. And these stocks are breaking out, and a lot of them are in blue sky breakout, and that's what's giving the biotech sector a lot of fuel. Some of it has to do with coronavirus and the potential that these gene therapies could have an impact, but overall, this is a sector that you want to be keeping an eye on because it has a lot of hype behind it. And the biotech sector is definitely benefiting. It's been our strongest sector at all-time highs 2 days ago and forming a bull flag right now. SMH, semiconductors, 2-day time frame. High, low, lower high, trying to form the higher low here. Green day would be a great sign for the bulls tomorrow. Same case for everybody. The VIX with a big pullback today. So the high of yesterday, 37.10. We failed to break it first thing. TVIX is being delisted soon. But look at that double top. 160, 159.60, really nice top fish. Again, tiny risk. You're risking, you can risk 0.5%, less than 1% on that top fish. Looks like UVXY is going to be the only instrument in the short term once TVIX delists, but only leveraged instrument, I should say. So UVXY failed to break the high of yesterday by 28 cents, less than 1%, and then all bears with follow through. So where does the VIX stand from here? Have to see, what were we looking at? The 2-day time frame. So we have to see follow through. This is obviously a big upper wick and a lack of follow through at this point. The bulls are attempting to set a weekly higher low, but not really convincingly doing so in any way. Bulls are struggling, the volatility bulls struggling to see 2 green days in a row. When's the last time we've seen 2 green days in a row? When we dropped hard in the markets. The last time we saw all 3 sectors dropping at the same time during the day, that was early June. Gold, potential daily bull flag, absolutely possible. Burden of proof is on the bears to prove to us that it is not a daily bull flag, and we would have to see a bear break of 1754 for that to be the case. But right now, it is a daily bull flag, and there's no red flags to this consolidation whatsoever. Silver, daily inside bar. If silver breaks bullish from this inside bar tomorrow, our daily higher low is set at 1737. And we'll then be looking up at 1809, 1819, 1839. Lots of nines in play. So metals overall holding on just fine after a pretty solid red day yesterday. And again, all of our assets are still correlated, which is why I'm cautious to a certain degree. People are talking about diversification in gold and diversification in crypto. If all of these assets are correlated, there's no diversification there. If the S&P 500 has a big red day and gold and silver and crypto is all pulling back, that's not diversification. So as long as the correlation is present, if I want diversification, I want inverse correlations. I want gold to go up when the S&P 500 goes down and vice versa. We're in an environment that the same thing happened during COVID in March, and the same thing has started happening again over the last couple weeks where all these assets are correlated and just makes me less comfortable. And that's probably why I'm not interested in a gold entry here, because it's just correlated to the S&P 500. And I do have some S&P 500 bullish exposure and some no-touch positions. So that's probably a reason that I am less interested in gold now than I was previously back in December and back to start this year when it was a different correlation in a different environment. Miners, so they too are very strong, just fine, closing at the high of the day. Have we changed the hourly trend back to the bulls? We have. Higher low and higher high. Daily time frame, could be a bull flag, and we're just looking up at 35.84 as resistance. If gold's a bull flag, these miners will likely be a bull flag as well. Oil, trying to set the daily higher low. We did break the low of yesterday. 4-hour trend needs to change. Solid bounce, but we need a 4-hour higher low and higher high once this move tops out for us to be confident the daily higher low has been established. We'll then be looking back up at the high. I think it was yesterday's video where I was talking about the potential of a head and shoulders pattern, but this pullback, I would want to see it a bit more significant. Could we see continuation with this size of consolidation? Yes. It's not significant enough for us to say the most likely scenario is a daily lower high. If we had dropped a bit further, if we had dropped to the upper 35s, let's say, it would have been a different scenario. We would be looking for a lower high. So the size of the pullback gives us the probability needle. Are we probable to see continuation, or are we probable to see a lower high and tightening range? And for the S&P 500, after that drop in early June, we knew to be looking for that lower high. And we had that cautiously bearish bias, knowing that was the most likely scenario. So size of consolidation gives us a lot of information as to what to expect as the most likely scenario going forward. Natural gas, all-out dump, free fall, bears in complete control. It's been that case for a long time. Exponential 12-period resistance. And man, the people that got blown up on this bull move, it must be painful to watch. You had that hedge fund that put out that heartbreaking video of losing everybody's money and then going out of business, getting caught in the short squeeze, and here we are, at a third of the price. And that is why these numbers in cyberspace flashing around can bite you in the butt where logic and fundamentals go out the window. We're 70% under that level. And that is why stop losses are required on every trade. SPY is now up after hours. The financial sector is recovering a good bit. Decent bounce. We're just going to look for a 5-minute lower high on the bounce, but we're not dumping is the bottom line. So hope you had a good day. We're going to be launching this swing trade report in a couple days. That website will be going live and it'll be open to the public. And I will let you know in these videos and on social media when it is good to go. Appreciate the support. Have a good day. See you soon. If anyone knows what these are, please let me know, because I planted them and I have no idea. It's got these dark blue, purple berries. None of them are ready yet because they're not coming off easily. Big purple cabbage ready for harvest. This is cilantro that's all gone to flower, and now the pollinators are having at it. Going to make some basil pesto today, lots of dill. Letting the salad go to flower, it's starting to look like Dr. Seuss.